Hey guys, Be Twice here. Today is Thursday, July 8th. We're going to take a look at Tesla and a handful of other stocks tonight. I wanted to start off by looking at the daily on Tesla. I had a lot of questions earlier about do I care about indicators? What indicators do I use? Did the possible death cross mean anything to me? And the reason I had these questions asked to me is because on Twitter this morning I was saying that the Tesla dip was a buy. If you remember from my video, I think yesterday I said that if Tesla passed this level at 635, that I would be getting out because that was invalidation. Now, with that being said, the reason I was tweeting that is because obviously I can't do a video while I'm at work, but I can send a tweet here and there if I think that I could have potentially been wrong and if it's worth something saying. So, with that being said, this morning when Tesla would have passed my invalidation, I am very long Tesla. I'm also hedged in case I'm wrong and it goes lower. But with that being said, I wanted to recount to see where we possibly could be going, because I do ultimately still think that Tesla could be going to all-time highs. So I didn't want to close my position prematurely and end up have it rallying, which ultimately it did today, anyways. So I really wanted to look at the bigger picture. So what indicators do I use? I try to use technical analysis with trend lines and different chart tools like triangles, stuff like that. I try to use supports and resistances. I do look at the moving averages, and I try to use candlestick patterns as well to tell me is something bullish, is something bearish, where could it possibly going. Now, with all that being said, I use wave theory mainly. So what wave theory ultimately says something's going to do, I'm going to go to the bank with that, right? So I'm going to be putting my money on wave theory 99% of the time unless I see something that completely changes that. Now, with that being said, let's look at the daily chart of Tesla. So what did we see today? So at open, we pulled down. We were going past my invalidation. I was looking at going, hey, what could possibly be happening here? Should I exit my position or should I reconsider this? So I recounted, and what I'm seeing is a 5-wave move up for a higher degree wave 1. So I'm like, okay, cool. That's a higher degree wave 1. So we could possibly be pulling back for a 2. Is that what's currently happening? So let's look at the price action. So we come down here, we're like, okay, we dumped hard at open. There wasn't technically a death cross. If this 50 crosses a 200 is a death cross, is that the end of the world? No, because it could cross back up immediately, and it didn't cross right away anyways. Plus, Tesla came down, it caught support, the 76.4% retracement, saying, hey, this really could be a wave 2. And then we had this extremely bullish candle. So we opened at 627, we dumped down to the 76.4% retracement, and then we quickly rallied. So I was able to make a decision within the first 30 minutes of trading that, hey, this was a dip to buy. This is probably a wave 2, a great area to get in and ride this thing up to possibly all the way up to 720, possibly up to all-time highs. Couple that with a lot of times I will look at different platforms like flow platforms like Titanflow, Cheddarflow, stuff like that. And what those show you is how much premium of options has been placed against a certain thing. There was like $50 million placed on Tesla calls by like probably 10 a.m. this morning. When I see something like that, it really makes me reconsider getting out of my position, even though I was considering getting out. Mind you, if I would exit it open, I was going to take a huge loss. I was going to take a huge loss in this position, so I had to really think about it. Ultimately, the decision I made was I'm not going to exit my position. The bullish the fact that we bounced off the 76.4 and that we are rallying back up, to me was pretty bullish. And then couple that with all the call premium made me actually tweet that I thought Tesla was a position to double down on. And ultimately that's what I did. So hopefully it works out. I do still think that we're going to be heading up into the 700s and hopefully all-time highs. But we'll see what happens. Like I said, I'm still hedged because the 425 price target is still possible. So let's move on to AMD. All right, so we're going to be looking at AMD. We're going to be looking at the hourly. This is the time frame I prefer to look at because I can look at wave counts easier. So ultimately what I'm seeing, just like I said yesterday, is that we were pulling back for a wave 4. The wave 4 went lower than I thought. I was thinking like maybe 88s or 90 or something like that. I was really hoping it would hold the 38.2% retracement. I do think that we bottomed today. So I do think that this dip was a buy. I think if we pull back and open a little bit tomorrow, I think that dip is also a buy. I do think that our price target is 100, and that does stand, and that is where we are going. So like I have been saying, AMD dips are a buy, and I'm sticking with that. All right, so let's go to Apple. So I'm going to take a look at Apple because I drew on this. I put this chart out a little while ago of me thinking that it was going to the 150, 155 range for this wave 3. Apple absolutely obliterated the downtrend line. This is an example of where I try to use trend lines to tell me where it could possibly be going. I upped my position right after we blew through the trend line, just because we were able to kind of gap above it a little bit. And then ultimately, I increased my position today as well on this dip. And the reason I did so is I see us pulling back as a wave four. Most of FANG, and I'm not going to go over all of them in this video, but most of FANG, Facebook, Google, Nvidia, all these different stocks, Amazon, they were all pulling back today, going down for wave theory, actually calling for them to pull back a little bit for wave fours. QQQ is also pulling back for a wave four, so you'll see that here in a minute. With that being said, that's why I doubled down on Apple today. It opened, it was at 140 a share. I figured it was going to catch support. Ultimately, it did rally from where it opened. So I was able to pull some profit just by getting in once I saw the potential for a dip buy. Now, with that being said, we still could pull back a little bit more and have a valid wave four in these names, in the FANG names in QQQ. So don't be surprised if we see another flush tomorrow at open. It's a dip buy. Buy that dip because we are going to 150 plus on Apple. All right, so let's take a look at Amazon. Amazon has been one of my biggest wins here in the last month or so, possibly right behind PLTR or Etsy. But Amazon, what we're seeing here is that we actually popped up for a three, pulled back for four. If you go watch my previous videos, I was showing three going a little bit higher and then not pulling back as deep. Ultimately, the three ended up being a little bit shallower than I thought, but it still pulled back and it's doing exactly what I expected. I expected us to pop up for the three, pull back for four. That's what we did. We ended today up 1%. The market is dying and Amazon's positive 1%. What is that telling us? The FANG gang is going to carry this market to the next level. When times are tough, people put their money in Apple, Amazon, all these growth stocks that are not going to be hurt by a retracting economy. If people start to think that's what's happening. So with that being said, any dip on Amazon is a buy. We're going to 3,800. We'll probably have a good pullback from there. Maybe we'll get to 3,900, then a pullback. But then from there, we're going to be going to the 4,000 range. You can put your money on that. I will continue buying Amazon dips until we see this 4,000 plus. I do think once we get to the 4,000 range, whether it's 4,200 or a little bit lower, we'll have a pretty decent sized pullback. We could even see a pullback after earnings, like Amazon likes to go. So be careful around earnings. But with that being said, I'm sticking to it. Amazon dips are a buy. Okay, so let's look at real quick Etsy, which. So Etsy, what I was calling for a wave two bottom, and I haven't even looked at this chart today, but I knew that I kind of knew what it did by price action. So we came down and we hit what I was calling my probable wave two bottom of the 161.8% extension. This is what I'm really liking for the Etsy bottom for wave two. I said that this was the area to buy the dip. Etsy showed a lot of strength today. It ended today positive. 1.5%. So we gapped down and we ended positive 1.5%. That's some serious strength. What I expect from Etsy here is that we're going to see a slight pullback and then we're going to be rallying. That rally I do see is in a wave three, could take us up to as high as $260 a share. I'm still in Etsy. I doubled down on this pullback. I do see us going there. If it does get to this 260 range, that'll be a great win since we've been following this since the breakout of the triangle. Now, with all this being said, Etsy, if the market does correct, could still technically pull back all the way down to 175. So we got to watch this. If we go back and we get lower than where we dipped to this morning, we'd want to exit because that means that we're going to be heading lower, and then we'd want to get back in as we get to this 175 range. So we'll watch this, but ultimately I do think we'll have a little bit of a pullback. That dip will be a buy, and then we'll be rallying all the way up into the mid 250s. All right, so let's take a look at SPY. All right, so the one thing I want to go over, wave theory. I don't think I talked about this earlier when I was ranting, so I'll go over it a little bit more. So, wave theory is not perfect. I'm not psychic. Clearly, anybody who's watched these videos knows I'm wrong all the time. I try to use wave theory and other indicators and trend lines to tell me where is the market going that I can actually get a position. If I'm not 100% confident that I'm buying a dip, I will not buy. Today was a great dip to buy, in my opinion, on SPY. So obviously, as you know, as the weeks go on, my counts change. They change on a daily basis. If I open my app tomorrow and see that the the futures are down 4% and we're somewhere down here, that's going to change my wave count. I might actually end up thinking that we've already topped. And with that being said, that's why a lot of times I use Twitter throughout the morning or the day when I can't jump on here and do a video to say, hey, maybe I was wrong. And I will say that I could have been wrong, but just so everyone's aware, at these levels, it is smart to stay hedged because at any given time, if my counts are wrong and we top and we end up hitting this wave 5 top, which ends up being the top of this 3, we could be heading back to the low 400s. We could go all the way down to this 398 range. So that's a pretty big drop. And if you're in options, you're going to get blown out on that drop. So hedge is not a bad idea at these levels. But with that being said, where do I think this thing is going? So today I thought it was a buyable dip. I said that on Twitter. Yeah, could we head a little bit lower tomorrow? Sure. We could see another flush down taking us to 425 or so. And if it does, I think that's a buyable dip too. Ultimately from there, I think that's going to be the wave 2 bottom. Once we hit that bottom, we're going to see a rally up for a wave. It's going to be a 5-wave impulse up. But once we have that 5-wave impulse up, we're going to be going up for this yellow wave 3 price target of 440. Ultimately, from there, I do see us pulling back to this 435 range. And then going up for our wave 5 to 450. So basically what I'm seeing is that, yeah, if we're pulling back for this purple wave 2, right, then we're going to see a wave 3 in purple, a wave 4 in purple, a wave 5 in purple, and that's going to take us up to this wave 3 price target of 440. Then we'll see our 3, maybe a 7 swing, maybe 11 swing pullback for our 4, and then we'll ultimately see another 5-wave impulse up for this 5. What I think is going to happen is when we do peak, I think it's going to be close to this upper trend line. Most of our big drops outside of the drop we saw back here and the one we saw today that really wasn't that massive, they've all happened up by this upper trend line that I've drawn that's going back months. That's what makes me think that our price target's up here, which validates what wave theory is saying that it's going to go to. So wave theory has it going up into this mid to low to mid 450 range, and that happens to put us up by this trend line. That's what makes me think, hey, this is where we're going to go before we see a massive drop. That doesn't mean we're not going to come back down and test this trend line before we get there. I just think before we see the move that's going to break this trend line, that's where we're going to peak, and then ultimately we're going to go down and break that trend line. So enough of the SPY BS. Let's move on. All right, quickly, let's look at QQQ. All dips remain a buy. Red wave 4, just like the Fang Gang. Yeah, we could see another flush down, and that's why I have my line drawn off of this circle instead of right at this bottom. I do think today's dip I do think it was the bottom. I do think it was the wave 4, and that we might get a little more pullback tomorrow before ultimately rallying up. But I think QQQ is going to see another impulse, maybe even 2, and that's going to take us up to the 380 range. So all dips remain a buy on QQQ, and I'm sticking with that. All right, let's look at CCIV because this is one that I've had a request. And just so you know, people, when you do request something, I don't ignore them all, but if it's something I've already actually drawn, it's much easier for me to just pull it up and review it. And then I'll try to get to other people's stuff like Bitcoin and all that, and that stuff when I have chance on the weekends when I'm not having to go to work. So CCIV, I said before, and I'll say it again, all dips remain a buy. We have a price target of $40 a share. Where I see us is that we've actually pulled back lower than I wanted. I wanted it to stop at the 61.8. It looks like we got a bounce off that level, went back up, and then ultimately headed lower. With that being said, as long as we stay above 2186, this is valid, and I still think we're coming down for a wave 2. And I think the lower we go above the 22 range, the better of a buy you're getting, because ultimately I do think we're heading up to the mid to upper 30s, if not hitting that $40 price target. So CCIV, still really do like it, and I would not be selling this. All right, XLF. So let's take a look at XLF. I'm long XLF, and this is another thing somebody requested. So there's 2 scenarios that could unfold. Let's look at them both. We're looking for our wave 4 bottom, or we found it. The bulls say we found it, and this is our bottom, and that this is a 1, and that this is a 2, and ultimately we're heading up for 38, going to pull back, and then heading to 40. So this first line is what the bulls see happening. This is what the bears see happening. I didn't take my time to make it red, but this is what the bears see happening going lower. The bears say, no, this is not a 4, this is a W, and we're heading down for 4 over here. That means that this is an X, and that we're not done flushing. We had an A, we had a B, and we're going down for C. If the bears are right, we should see this flush tomorrow. I don't think it's going to be drawn out. So if the bears are right, I do think we'll at least see some of the flush tomorrow, maybe finish it off on Monday. if the bears are right, I do like either the 61.8% extension or the 76.4% extension as the bottom for why, which is why I use this. It could go to 100%. It could go to 123.6. If the whole market's melting down, that's where I see it going. But I would say that if we get down here, the dips are a buy. I even like XLF at the level it was today, and I did buy this dip today. So with that being said, I am favoring the bull count, but be mindful that this bear count is correct. So, all right, guys, if you like these videos, go ahead and hit a like and subscribe.